The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovably soft and squeezably soft host, the koala bear of Wall Street, David White. And again, another wonderful day at the headquarters of technical trading and investing. It is TFNN.com as we get right into the bowels of the market. We're off almost 4 points on the S&P cash, 2.2 billion shares. A fairly quiet, unambiguous expiration day. I suspect we could see a little bit more weakness into the close. I'm looking probably 1838 for a close today. We'll see how close my guess gets, but it's an educated guess, and we'll be talking about that in the show. We are at the far edges of statistical inference in these markets, and we'll talk about what I think we'll see next week. But first of all, we've got those markets and a little bit of news to start off the day. Today in 1792 is the birthday of the dollar sign. The first time Big Uncle Sam had a signal, and a sign, and it showed up for the first time on a federal document in U.S. Treasury bond issued to George Washington. So, happy birthday, dollar. 1792. In 1991, the U.S. military blast of Baghdad and Kuwait. Of course, the market had been moving down, waiting for the start of the war. First day of the war starts back up, and guess what? 4.6% to close at 2623 on the Dow Jones. That seems almost like 13,000 points ago, give or take 1,000. So anyway, since then, pretty much everybody believes that as soon as the shorting starts, it's time to get bullish, and up until that time to probably be bearish. But since then, it's almost a self-fulfilling prophecy, but always something nice to know about the marketplace. Of course, GE came out, Morgan Stanley, SunTrust, UPS warned today. Intel had a false breakout earlier this week, and their earnings came out. They're back in the trading range. We're going to get into that, but we've got a market here where it seems like everybody's flushing their toilets at once. If you don't make your earnings, it all just statistically is down the crapper, and I don't know what else you can say, but certainly when we see these stocks warn or even hint at impropriety, it is shoot them 20 times and then ask questions, and then maybe shoot them a few more times. But very interesting to see now that earnings are blowing chunks on a great deal of these stocks. Some of these things are getting a little bit repaired, but I would say right now that we're looking at less than 50% of stocks making their earnings during this earning cycle. We had some questions. People emailed me. I'll have to insert later my little dingles about I've got mail, and ask some questions. I'm going to try to answer some of them today. One of them was about Yahoo and the big shakeups. Does it really matter? And my answer is no. Yahoo is all about Alibaba. It has nothing to do with what's going on. There's a lot of PR going on because of the CEO, and that she's just had a baby and she looks good and all this other stuff. And it's a lot of dribble as far as I'm concerned. We've got a gal that probably not quite as good looking as her, running a company that had problems when she came to it, and done a pretty good job at HPQ. And she doesn't get all the brouhaha A lot of this is imposed by the media, but a lot of it is being fanned by the flames of that CEO herself at Yahoo. You know, what this really brings back, if you've been trading long enough, there was a similar company that was stagnant and disgusting, and that was 3Com. They basically came out with the Palm operating system. Everybody had the little Palm pilots. It was going to be exactly what everybody thought the iPhone was going to be. And it didn't quite work that way. I enjoyed my Palm Pilot, but wasn't product for everybody. Limited resolution, kind of gimmicky way of entering text, although I got used to it. You know, we basically got Alibaba trying to push its way to being public. Now, can anybody tell me either 3Com or Palm? 3Com, as soon as the IPO was out the door and they'd sold all their shares, it went back to the company it was before the Palm IPO. I suspect we're going to see the exact same thing with Yahoo, but not before we see the same kind of treatment that Best Buy got, which is they're going to continue to push it up, push it up. They're going to do every trick in the book as stock operators to get this stock up. They're going to try to push it out to unsuspecting rubes in the market. And I don't know. It just seems to me that it's deja vu all over again with 3Com and Palm, and a lot of political correctness going on the CEO. That she had to fire somebody that supposedly wasn't doing well, I think had very little to do with him. I think it has a lot more to do with the company. And a lot of people are hired to fail. We talked about Apple hiring a gentleman to go after maps at Google. And, of course, Google had 6,000, almost 7,000 employees whose all-time job was to work on gaining data and perfecting Google Maps. This guy got 100 people at Apple. And somehow he's a horrible failure because he wasn't able to beat an army of 6,000 or 7,000 people that had 3-4 years head start on him. Some people are just sacrificial lambs. For all accounts, this guy didn't do anything wrong. It's hard to be in a market against an entrenched operator when you don't have an idea of how to chip away at their marketplace. My boss used to say, we're looking for loose bricks. We're looking for those places where the entrenched indigent company is not working or doesn't want to be. And that's how you actually get in and eventually become a guerrilla fighter and maybe one day overthrow the government that you had been attacking for all those years. Well, guess what? There's no real strategy that I see from Yahoo that will supplant Google anytime soon. It's no different than Apple Maps and Yahoo. If things don't go well, you kind of fire a couple of people. By all rights, this guy was an absolute hell on wheels over at Google. That he didn't work here at Yahoo, do you think suddenly he somehow changed? Anyway, he's going to walk away from 20 or 30 million bucks, so not a big deal. But if you want to look back into stock market history, in fact, I may dig a little bit more and maybe even do 5 minutes on 3Com and Palm and some of these other stocks that went to the moon but didn't come back. You can always give me a call at 877-927-6648, 877-927-6648. And let's see. Or you can leave a number in the den. Other things going on. We were talking about manipulation. A lot of people were asking how you actually manipulate a stock like Best Buy all the way up. And it was a combination. Literally everybody involved in this, a cast of thousands to drive it. I want to thank Z in the Den for reminding me yesterday because I thought about it earlier in the week. I had wanted to short this, could not find shares to short in BBY. And there are several reasons why, but it goes back to many things, but for the most part, how stock manipulation works on a grand scale. A lot of people stuck in this horrible stock. It went down to $11. And someone came up with a grand scheme of saying, we're going to run this stock. We're going to sit there and do nothing but continue to upgrade it. We're going to make it look better by firing people and closing stores. We're going to be able, for about a year, maybe a year and a half, to make things look a little better. And so what'd they do? They started off with a plan for the insiders to start selling. And they started their round-robin, three-count Monte game of shuffling shares to and from margin accounts and out of margin accounts, and engineering a short squeeze and short runs by using upgrades from the street. And it was so well orchestrated, I have to give the guy a hand. But normally there's some shares to short when you come in at the very end of it, which has given me kind of a window. I've been working on it, called FINRA, for reporting, talked to other people about how this is done. But to get an idea, let's say that you have 1 million shares in your float, and let's say there's a 10% short interest. Well, there are actually, of course, now 1.1 million shares in the float because there's been an extra 100,000 shares created to actually make the shares. So the price goes down. Higher volume, same company. Now, what you do is, especially if you have huge, a percentage of the company, that you can do is move your shares in and out of a margin account. Shares are only borrowable if they're in a margin account. So what you do is you get everybody all down, you get all the horrible news in it, you get everybody in the press to let them know, hey, this stock, we could be going bankrupt, and it wouldn't be a bad time to be going short here. I know Best Buy's only $12, $13, but you know what? Probably not a bad time to go short. In the meantime, of course, you've all got your cronies together, and you got the founder of the company that has millions of shares to go ahead and put it into a margin account. So what do? You let it go along. You get everybody all fired up that BBI is going the way of RIM, and you get a couple of people to come out with a upgrade. Things are starting to look better. And what do? You have the founder of the company move his millions of shares out of the margin account into a non-margin account, and suddenly everybody has to start gets margin calls and says, "Hey, you got to cover these short positions right now." And you just keep doing that, and back and fill and back and fill, and phony upgrades to the moon. Anyway, that's how it's done. Anyway, we'll be back in a minute. We'll be talking about Intel's shenanigans this week.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
One of the things I will I'll show you here, I covered it in one of my newsletters today, is even if you don't have a lot of data, you can go to Yahoo, click on Insider Transactions for a particular stock, and you're going to see it. And I'm just going to go through a few of them here. December 10th, 18,000 shares from Sharon, who's an officer. Richard Schultz, I think he's the founder, 232,000 shares, and that was on November 5th. On November 4th, 830,000 shares. On November 1st, 646,000 shares. On October 23rd, 450,000 shares. And we've got our director here with 150 and 150 on October 22nd. And we got a officer, Sherry Ballard, on October 21st, 32,000. Was there any real belief that this company wasn't auguring down to nothing? And well, great manipulation when it was so plain that everybody and their dog inside the company was willing to blow out as many shares as they could going into Christmas, with the false belief that they were going to be able to keep at least some level of margins back on this. But I'm going to talk with Tom about that in the 4 o'clock hour. But, I mean, I don't know of a stock that it's been this freaking blatant forever. Just go through this list. I mean, since August, July, I mean, these people have been selling and selling and selling and selling, and oh boy. But I mean, that's back in 2013. I mean, these people have just been selling, and it just, like, I think it might not quit. But just a thought. But anyway, we've been talking about options this week, and probably take you back to the beginning of it. And that was in 1906. Galton, pretty horrible gentleman by all accounts. He had been running around trying to make and sell a theory in psychology that only the intelligent people should be able to make decisions for the country, that everybody else was pretty much stupid and uneducated, and therefore only the elite class in England should be able to make decisions. Interestingly enough, he was wandering around one time in 1906 at a livestock fair, trying to come up with some genetic evidence to back up his somewhat flaky theory. And he ran into a intriguing contest. The idea was they were selling tickets for whatever it was in England, in Essex, for like $1 a piece or whatever, something small. They had 800 actual guesses of how much the ox, once it was all dressed and ready to go, would be once it was slaughtered and ready for sale. Some 800 plus people made a guess, and the average of the guess came within 1 pound at 1,198. This is called the wisdom of crowds. If you get enough people that are motivated and invested, and also there's some other rules. One, you want to make sure that they are not all from the same farm. You want to make sure that there's a diversity of guesses. And you're going to see a lot of people probably guessed 1,000, some guessed 3,000, probably 1 or 2 or 3 or 4. Those will be the outliers. Then you'll have ones that are a lot closer. And when you finally get down to it, it's not uncommon to see everybody come to an answer that's going to be fairly correct. Very much like the stock market. A lot of people hate stocks. A lot of people love stocks. Answer's probably somewhere in the middle. And one of the stocks we showed earlier this week was AEP. And I showed this exact chart to show you just how close this thing was to expiring somewhere between $46 and $47 this week. Some charts have a wide range, and we're going to show the S&P's range here in just a few minutes. But on this one, I pointed it to you because it was a 90% chance that this expired between $46 and $47. What do we have here? AEP. And what do we have? $46.68 today. And how can you tell that? Mostly by looking at the options. There is a Bayesian inference. And, of course, we knew that options were going to expire this Friday. Now, we'll get into this a little bit more. But it's a lot like baseball. I'll leave it at that. You can give me a call at 877-927-6648. That's 877-927-6648. And we can talk about your particular stock. But we'll get back to options and how to trade equities with options.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, one of the things that you can do, especially with baseball, is work on statistics. It's pretty easy to do. But one of the things that you'll learn, especially if you watched Moneyball or ever read any of the books about how they came up with the statistics on baseball, which seems pretty hard, but everybody now knows. In fact, I've seen lots of articles this week about statistics and going into the Super Bowl. There is a thing called beta distributions in statistics. It works extremely well with options and things like baseball scores, especially your batting average. And one of the things that you should know about those is, especially when you get toward the end of the season, you're going to see, there's a certain amount of at-bats by the end of the season. Most players that play every game every year will have somewhere around 700 at-bats. So when you get into late September, there's only so far that you could statistically go. I mean, you could strike out every time, or you could hit a hit every time, bat 1,000 for the last 30 days. But by that time, pretty good indication of at least where close you're going to bat. And most of the time, you're not going to bat 1,000, and most of the times, you're not going to bat 0 for that last 30 days. Maybe you'll bat 200. Maybe you'll bat 400. Maybe 425 for that last 30 days. beta distributions in statistics are a good example of how you actually do that. They work great with those kind of distribution models where the percentage and proportions are known, where you have known values. And when we're looking at these, and I'm giving a number of where we're likely to expire, it is based on several things. The actual curve of beta distribution, I'm showing them here. I'm going to get into this in a webinar the 11th of February, but each one has kind of a pattern. I talked about on Monday the big U. I talked about the X, if you're seeing it here in kind of the red. I also talked about the hockey stick, which is this one that I'm showing right here. They all mean stuff, and basically it's either there's a wide expectation, no real number pops up with a U, that there's a standard bell curve distribution of where these things should expire, and then there's a hockey stick. And basically that's, yeah, could it go a whole lot lower? Yes. But could it go higher? No. Or could it go lower? Great probability of lower, but, it's basically a one-sided version of these beta distributions. Now, when we looked at the SPIs earlier in this week, I thought that we probably had a good chance of expiring somewhere around 180. A standard distribution, one deviation model would have us probably in the SPIs down at about 177, and at the very high, 184. Of course, 184.42 last night. We're just a little at, 180, 184, 1841. I'm expecting a close to get us at least one more tick inside this to at least be within the standard deviation. But you can use statistical tools. I was thinking that we'd at least get back halfway because I saw a lot of these stocks acting very weak. We are continuing to see at least indexes being propped up with a few stocks, even though a lot of them are taking it for the team over the last week. But we're pretty high on this. That gave me the confidence to do some other things today, and we'll get into them. Let's finish up the news, and we'll get into some charts. Probably the most interesting thing is that politicians think that they're smarter than the people on Wall Street. Over in Europe, the Eurozone decided that it wasn't fair that Goldman employees were getting these big bonuses. So they passed a law that says no more bonuses. So Goldman Sachs decided that, you know what, we're going to have some role-based play. They just renamed it. Not going to call it bonuses anymore. Everybody's going to get what they got before. Socialist weasels in Europe had their day. Oh, we stuck it to Goldman Sachs. And guess what? It means nothing in the end. It's now, bonuses are now called role-based pay, and it can be paid out monthly and some accruing to be handed out at the end of the year. Sounds a lot like a bonus, but as long as they don't call it that, it's not a bonus. In legal news, for those that have been trading for years, Tyco's Dennis Kolowski is getting out of jail today. And he was kind of demonized. A lot of stuff that didn't have anything to do with his bad behavior was brought into the trial, probably skewing it a little bit. But the guy was kind of ripping off his own company. But 8 years, 8 1/3 years, probably rather draconian for a first-timer. But he is getting out today after all these years and all the golden umbrella stands. 8.5 years, just a little tough. Anyway, he's got a golden parachute to fall back on because he still had gobs and gobs of money. So we are doing I actually don't do a lot of trades on Fridays during expiration, but I had a kind of a gift today, and I'm going to let it play out kind of to the end of the day. But one of the reasons I'm going to do that is because I have a particular problem that some people may have had to in options, and that is today. I have an option market maker that is making it pretty tough for me to get a decent fill on it, and I'm going to just go ahead and exercise these probably about 10 minutes before the close, and so I'm going to stick it to them, and that's why they're called puts. I'm going to put it to them at the end of the day out here, but not bad. They had bought some 50-cent puts this morning. They should be worth a little over $2 this morning, and we'll be maybe I'll have more time to talk about this later. Wanted to get into Intel, INTC. First of all, yesterday I said I suspected that they would disappoint. The reason I suspected that they would disappoint mostly was because there was a bogus upgrade on, I think it was a Monday or whatever, Tuesday. What is that? It was on the, is that right, the 14th? 15th, 16th, 17th? Okay, it was on the 14th, bogus upgrade day. We had some guy out of left field come up and just said, I just think that they're going to do so much better than what they're saying. And really, I started pounding the table on CNBC and got everybody to jack this stock up to hit to $27.12 on the 15th. And, of course, rolled over a little bit yesterday into earnings and then right back down. Now, what's important about this is they were able to run a huge amount of people out of this stock because guess what? They were going up against this June 4th high, and you needed 680,000 shares. Is that right? 6.8 million shares. You came into it with 5.8 million shares. And that's all she wrote. Didn't have enough volume. You knew that the day that it broke out. And so I actually had 74. But just any of these last-minute upgrades going into earnings are always extremely dubious. I didn't like the volume in the last leg up. I think this is going to be a great company. I still want to buy it back in the 21 somewhere. And I think now I'm going to have that opportunity if we're lucky enough to see the markets pull back into that. Again, you can give me a call at 877-927-6648. That's 877-927-6648. SWKS, Skyworks Solution, SWKS. One of the few companies actually reporting and going up. It didn't hold the highs today, but probably fairly decent for a day like this. What are we looking at? This is one of those companies that's in the Apple supply chain. They're looking just a little bit better, and enough of a short interest out here to go against the grain of a market that's, what are we down on the S&P now? Off 4.4 points. And again, I'm thinking, and put in my newsletter this morning, I suspect that we're going to close somewhere around 1838. And there's some reasons for that based on futures and options on the SPYs. But that's the first. If they can get to that point, they can cut off a huge amount of payouts on those options. They can just get to that 1838, and that's what I'm looking for the close. We'll see how well that works out. 2.4 billion shares on the consolidated tape. Anyway, we're going to get back to Skyworks Solutions here. But very interesting. This thing is, let's even get a longer-term chart on this thing. This thing is right now back to the highs. That high happened on September 7th, 2012. 5.9 million shares. You have 10 million shares, but it failed to hold that high. And we've probably been going through 6 weeks of stocks that have had this. Breakouts, you've got the volume, they can't hold the previous highs, and we can probably go through a few of these with Tom tonight also. But these are the stocks that are really interesting me over the next few days, along with a few stocks that are had some nice Gartley patterns that are also probably setting up fairly decently. Again, I'll be on the show with Tom, I think in the 4 o'clock hour. Starting at about 4:20, we'll be talking a lot about technology, and I think a lot more about charts. We've had a lot of discussions about technology over the Consumer Electronics Show. I think it's now to get into the technical part of charting and looking at how a lot of these stocks actually are doing. Anyway, any questions in the den? You can always post them, and I'll be glad to take a look at maybe anything going on. I know everybody's in the den is big gold traders, and we've had a nice pop-up here. GDX looks to me like a lot of people are buying commodities going into this long weekend. When we look at the GDX, I've been bringing up this week just where the resistance level was. In fact, somebody called, what was it, on Tuesday, asked me what I thought about where gold was going. I said I thought that the bullish bias was still in for this week. I suspect we're probably going to give this back on Tuesday morning if nothing happens. Look for probably the gap back down to, I don't know, 22.5, something like that. Let's take just a little better look at this here. What is that? Yeah, probably yesterday's printout here, which was 22.41, 22.70. I'm probably going to see GDX pop back in there on Tuesday. At that point, after long weekends, it is not uncommon to see trends change, not only in commodities, but especially in equities. It seems like a lot of people get a little extra time off. They do a little extra homework. They talk to a few more people, and you see kind of the character of the market change. And I think we're probably going to see that. So it doesn't mean that it's done going up, but it probably means that if we think this is kind of meandering, then it's probably going to turn to a rocket up or a rocket down. You tend to see the character of the markets change, and that's what I'd be watching for on Tuesday when we do get back. But probably a little of this, buying a little protection as we go into the weekend. Let's see, what do we have here? Oh, I know what I wanted to do. There we go. Go ahead and find it here real quick. I wanted to look at other stocks moving out here today. And March over up $20.30. American Express came out. So did UPS. And talked about weakness. We'll go to UPS in a minute. American Express, not a bad day to be reporting out here. And a little spinning top up here, which is going to make me wonder if we close back below and get an abandoned baby in this thing. Of course, UPS came out and warned this morning. And what happened? All those last-minute packages they tried to get to customers were at the expense of a lot of overtime and part-time employees, and that's going to hurt their bottom line. It's repaired itself a lot more off the bottom, but still down a bit on the day as we watch it. Anyway, give me a call, 877-927-6648. That's 877-927-6648.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, wanted to look at Sallie Mae today also. Probably a good indication of another stock breaking out to new highs and rolling over. SLM. And this thing coming down on huge volume today, and probably a good indication that we've got some trouble right here in River City. May 29th saw a high of $26.17, 12 million shares. This thing kind of rolled up into earnings, 4.3 million shares, the highest volume within 0.5% of the high. You've got pretty much a high volume low back here on the 13th of December. It blew right through that. Your next big, probably high volume day is back into this gap. My guess it's going right back down to the $23 level in that price range. And of course, these are the people that give us our loans for our houses. And my guess is that we're probably looking for some changes fairly quickly. I suspect that we're going to see a break of that 3% yield on the 10, and probably going to be seeing it here, I think, in the next 15 days. And that will probably be a huge change in the market. Of course, we talked about Best Buy, talked about Skyworks. Electronic Arts, we've been talking about a lot about just how well games and game consoles have been selling. They were up, 11% today, if I've got it here. Where's my thing here? There we go. Let me zoom in on this so we can see it a little bit better. But game sales up very strongly. Only a few things selling well over Christmas, and that was smartphones, tablets, and game consoles. Looks like the Wii games consoles and the Nintendos are being guided down somewhat today. But a lot of people are looking at these companies moving rather well into the news of better game sales overall, but not to be surprised, because a lot of these guys getting newer equipment, newer machines, Xbox Ones and the Nintendos all coming at you. You're going to need new games, and you're going to want games that show off the latest features of those consoles, and certainly seeing that in Electronic Arts today. The other one I wanted to watch out here was a COF, and take a quick look at that. Of course, just about half these things are rolling over fairly hard, certainly high volume out here today, and we are right back into the last high volume day, which was on the 18th of October. That day had 6.2 million shares, and we are at 8.3 million shares already. So pretty much back to those high volume days, and hard to see anything more down there. Got a lot of these stocks that could pull back fairly strong, and let's see if there's anything else out here. You've got a gap out here at 54, and a lot of congestion at 62. So you can see some very quick moves off of these tops, but none of these earnings are looking good, folks. Even the good ones earlier this week were arrived at by those numbers by a lot of cost cutting. Wasn't business getting all that much better. So anyway, you have a great, safe day. Remember, sell when you can, not when you have to. And I'll see you at 4:20 with Tom O'Brien, talking technology.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.